Can regenerative agriculture truly revive rural America on its own? Are there other things at play that need to be considered? My guest today on episode 416 of the Working Cows podcast is Joel Hollingsworth. And his answer to that question is yes. Among other things, we need to figure out how to get back to a sound money system.
The dollar is causing us to play with a different set of rules on the game board of competition. And so in this case, with Trump pushing towards the tariffs, everybody thinks it's moving towards a world that's less fair, but really what he's trying to do is undo the negative effects of Triffin's dilemma. But if we play this cunning, like Trump seems to be trying to do, we have a position to where you could see the monetary premium come out of the things that are hurting production in America, but us also protect our wealth through participating in the rise of the Bitcoin as a new global currency or global money.
We'll discuss that and more today on the Working Cows podcast, brought to you by the Patreon supporters.
Welcome to the podcast that gives producers a platform to discuss and share paradigm-challenging practices. Practices that have increased the effectiveness of their operation and the joy that their families have received from this lifestyle.
Howdy, everybody. It's Clay Connery, host of the Working Cows podcast, recorded exclusively in the Understanding Ag studios. And this week I'm excited, or today, I guess this is the third episode this week, I'm excited to share with you an episode with Joel Hollingsworth. He is on Twitter at Untapped Growth. He is one of the people behind Smoke River Ranch, and we'll hear more about his operation here in just a minute. But what we are talking to him today about primarily is an approach to sound money that can help be a lever that can help regenerate, restore, revitalize rural America along with regenerative agriculture. If we continue to face runaway inflation and some of the other things that we'll talk about in this episode with Joel as well, we're going to continue to struggle, even with regenerative agriculture, to really move the needle on regenerating and reviving rural America. And we will have links to everything that we talk about today in the show notes page for today, workingcows.net/416. This episode is brought to you by the Patreon supporters. They are the ones who have been with me since the beginning, many of them, and they generously support on a monthly or yearly basis, and people support at all kinds of different levels. At the $20 level, you get 4 gifts sent to you throughout your first year, and then generally I try to do an annual gift to those guys as well, to those guys and gals as well. And then the $10 level, many people are there. You get weekly bonus content, and actually for the first quarter of 2025, it's more often than that because I've been releasing quite a few Friday episodes, and Lord willing, we'll continue to do that through April of 2025. And those episodes are we've also been recording bonus content for all of those Friday episodes as well. So a lot of bonus content, as I said in last week's episode or Friday's episode. They're probably, Lord willing, going to cross over 200 episodes of bonus content, ranging anywhere from 5 minutes up to an hour or more. And so Joel, as a matter of fact, we recorded a very good piece of bonus content on the ultra high density grazing genetics that are adapted to ultra high density grazing, and the journey that he's been on for that. So if you're interested in any of that, check it out, patreon.com/workingcows. And for now, here is my conversation with Joel Hollingsworth. Joel, thanks for joining me today on the Working Cows podcast.
Pleasure to be here with you, Clay.
Yeah, been I think quite a while. Followed you on Twitter and kind of paid attention to what you're up to, and appreciated that. And then engaged with something recently that you had posted, and you sent me an article that'll be linked in the show notes page for today, about the connection between soil and money, and the need for sound money in our helping our agricultural systems thrive, and really our nation as a whole. And so kind of maybe just give us a brief overview of the soil, the state of the soil as you see it, and kind of how we got here. And I know that's asking a lot, but just like a couple of minutes on that, and then we'll dive into this issue of sound money, and really how that connects to thriving local economies.
I would love to. Do you want me to give any overview first of like what I do from a ranching perspective? So that way it's not just me talking from a intellectual perspective of me knowing I actually run cows too.
Yeah, sure.
So I'm in Northeast Oklahoma. We're over in Mays County. We do Johann Zeitzman style ultra high density grazing on about a square mile of land. We've got about 450 head of cattle. We're running them about 4 to 5 moves a day, doing 650 to 850,000 pounds to an acre, developing low input, ultra high density capable genetics, starting with like Pineywood mama stock, which are like just Gulf Coast original Spanish swamp and woods cows, running composite bulls on top of that of like some Mashona, some Aubrac, some Old Line Angus, some Murray Grey, a little bit of Thule, a little bit of like quality South Pole Mashona cross. And just running the program, trying to select out the best females that breed for being 2+3, as Johann would call it, to where they breed at 14 or 15 months. They calve before they turn 2, breed right back, calve before they turn 3, wean those calves at 50% of her body weight, run the bulls off the best mamas in a multi-sire program, and just rinse, repeat over and over again. Doing all that with the density and the pressure of the non-selective grazing and no parasite or medical support. It's been a good adventure because the challenges of building ultra high density genetics, I think, is a lot larger than I or a lot of people anticipate trying to get into Johann Zeitzman style grazing. The pressure on the animals is just, it's a lot more than daily rotations. So that's all been a lot of fun. But my background, I went to college for business economics. I kind of cross these weird little threads, which is part of why I'm able to do what I'm doing even in the ranching world, because that kind of cross-disciplinary perspective and approach to things has opened up a lot of doors for me. And it makes it fun where I get the opportunity to share stuff like that article, that Soul and Money article with Will Tanner in the American Tribune. Want me to just dive in from there? That good enough?
Yeah, no, I appreciate that. We'll probably dive into some UHD genetics for some bonus content, but yeah, let's talk kind of our soil health journey as a nation in a 50,000 foot flyover, and then we'll connect that to sound money.
Beautiful. Okay, so the argument I made in the Soul and Money article, it's strongly derived from a book by David Montgomery, which is titled Dirt, the Erosion of Civilizations. He talks about how you can track the flourishing of any nation in history through their approach to their soil fertility. He tracks the history of Rome, China, the Aztecs, lots and lots of different places, to where when a culture and civilization was invested in their soil fertility, that civilization flourished. When they started extracting from their soil fertility, that civilization typically decayed and started their process of collapse about a generation later, about 40 years. And he tracked this pattern through all of history. And it got me really curious looking at that through the lens of America, right? And so you read like the stories and things written by Thomas Jefferson. He talks about how the quest to go west was a quest for soil fertility. We had been raising money crops of like tobacco and cotton in the eastern U.S., and there was a lot of European-style plowing and tilling and erosion and soil losses. And so everybody just kept going west chasing soil. And then we kind of rose to being this global power, the reputation of being the breadbasket of the world, right? We had this massive, beautiful inheritance of the fertility of the Great Plains, which was developed by the bison, right? These large herds of ruminants grazing intensively and non-selectively, rotating with the seasons, working symbiotically with the prairie ecosystems in nature, right? building that 10 or 15 feet deep topsoil. And so you look at our history, there's basically two places where that started kind of its downward spiral or descent. The first was the overtrapping of the beaver. They're little water engineers that build basically just little trapments and swales all over the west and Midwest of America. And that was being trapped out to send the furs back to Europe, to import the wealth of Europe into the U.S. The Native Americans participated in it. It's kind of very much like we talked in the article about the idea of agri-beads or panos. Have you ever heard of those before, Clay? Do I need to give a little refresher on those? I'm assuming
it's not. It's been a few weeks since I read the article, so not jumping to the front of my mind. But
okay, so agri-beads is a perfect example of explaining how monetary imperialism works from a large national power in a colonialism type mindset invading a smaller nation. So those were basically Britain coming into like Africa, and so they'd come into these little societies. Agri-beads were these little blue beads that these African societies would use as money. And so they came in and they were starting to buy up and extract and ship back to Europe the wealth of these natural resources of these African nations. And so they realized that they're using these little blue beads as money. And so they sent back like a letter on a ship up to Europe, said, hey, boot up a factory to make these little blue beads. And they started just sending down ships of money, of blue beads, and just buying everything and strip mining the natural resources of these nations. Panos was very similar, but it was like woven cloths that were used, right? Because money is supposed to be something that's scarce, that could be the liquid good that you exchange things in a local economy, right? And it's supposed to have like an unforgeable costliness to it, which is why gold makes a really good money, because the costliness of gold to make it available is the cost of mining it and getting it out of the ground. And it's got all the other monetary properties of like its durability and like its divisibility and like all those little things that make it function well to where like you can just keep gold and it's not going to just rust or melt on you, right? Like cattle's been used historically for money, but cows you have to feed. There's a carry cost, or like salt's been used historically.
The word a buck, right? It comes from tanned whitetail hides. That was a unit of trade, and that's how the dollar got the name. That's why it's called a buck. In some cases.
Never knew that.
Yeah.
I just learned something. That's awesome.
But it's so also, cool. I mean, on some level, it's similar. It's divisible, right? You don't have to sell the whole thing. You can sell parts of it and trade it for less or more based on how much you're trading.
Yeah, and so like salt's been used historically as money as well, but salt doesn't have much density of value, so it's really heavy to transport. It gets rained on and it melts. So like all your money's gone. Here in the US, we overtrapped the beaver. It was kind of this imperialism of extraction going back to Europe, trying to get access to the goods and services of Europe, where the natives are trading the beaver for like tools, metal knives, guns, things like that. Then the bison, which was an intentional act of genocide against the Native Americans politically by the U.S., was massacring them, which we really, I don't think, understood the consequences that was going to have on the ecology of North America. And so from there, you see this descent into the Dust Bowls in the 1930s, where erosion had kind of just taken fully a hold, and the soil was blowing freely across the country. And the Dust Bowl is such an easy example of this dynamic of the tie together between economics and soil, because you had the Great Depression happen basically synonymously with it, right? And so that was where that 40 years had come of like us extracting from the soil and it stopping working anymore. But we ended up the world wars becoming the world reserve currency, and we used the energy of all of the world wanting our money as almost just like exporting the dollar as a natural resource would be the easiest way to say it. And in doing that, we were able, through our military dominance, to maintain access to cheap energy through the power of the dollar. And so that's where we got into so much as we moved on of the soil extraction causing farming to slow down in America, it was this whole move towards the Earl Butts, go big or go home, plow fence row to fence row, turn the tools of war of the nitrogen production that was used for bombs into let's make fertilizers for the fields, right? And you fast forward another 40 years from the Great Depression and the Dust Bowl, you got 1971. We had been on the gold standard. We had the problem with Triffin's dilemma, which I'll explain here in a second. And we had been exporting dollars, but the world had been pulling real value out of our country. And we realized that we just couldn't pay our debts anymore. So we defaulted to the whole world. We robbed the world by leaving the gold standard and telling them that their money was no longer backed by anything, right? And it bought us another generation to rob the world. And so you fast forward there from 1971, when we left the gold standard, to 2010, you got that other crisis, right? You got the 2009 housing crisis and the economic collapse. And so there's these kind of generational periods that first start with your respect for your soil fertility, but all of these dynamics of domestic production, starting first with agriculture, but we talk a lot about the reindustrialization of America, right? That's a hot topic issue right now with tariffs and bringing manufacturing production back home. All of these things are not just tied to, say, like the working competence of the young generation or their ethic to go out there and take pride in their work and work hard, or their intelligence. There's these macroeconomic things at play that influence our capability as a nation to have quality domestic production. And so that's where like Triffin's dilemma comes into play. Is that a good overview? Did I miss anything you want me to touch on before I dive into Triffin's dilemma, Clay?
No, I think that, again, David Montgomery and kind of his thinking about soil and the way that it is impacting just our viability as a nation, and a lot of those things are going to resonate a lot with people. So I think we've covered that. Now let's talk about the sound money and how it kind of fits into this whole piece, and why maybe, I think, according to your way of thinking, regenerative agriculture isn't enough necessarily to save rural America. We're going to need sound money to go along with it.
Yeah, okay, so Triffin's dilemma. Triffin's dilemma is this idea that being the world reserve currency is an exorbitant privilege, but also has an exorbitant cost. And the idea is that the world wants dollars because they want access to the world's marketplace. So demand for your money as a good is high. And when demand is high, the price goes up, right? And so dollars become expensive because everybody wants them. Because of dollars being expensive, we get cheap access to foreign goods, and it pushes us into a very strongly consumerist culture because we're importing things with an advantage, but it also forces a nation to run a trade deficit. Otherwise, you destroy the liquidity for the world to be able to have access to dollars that enables global trade. And so it puts your nation into debt, which drives inflation, and also that trade deficit and the cheap access to foreign goods over enough time guts domestic production. And so this idea of Triffin's dilemma is this thing where we can defend our own domestic production, but at the cost of destabilizing the world. Or we can, for the short term in this case measured in decades, enjoy that privilege of being able to be consumers who have a super high standard of living, but the cost of it is the destruction of the productive capacity of America. Another way of explaining this, kind of like a mental model. Have you ever heard of the term Dutch disease, Clay?
I think so.
Yeah, I hit on it some in my article. Dutch disease is a term that came from Holland. They discovered oil, right? And their thinking was the government is going to extract the oil, they're going to sell it in the global marketplace, and they were going to do this grand social experiment of using the income from the oil as a nation to give universal basic income to all the citizens. The thinking was it's going to cause this like renaissance of the creative arts and entrepreneurship and creativity and productivity, and none of that happened. What happened was the exporting of that natural resource, just like we're talking about with Triffin's dilemma, it gutted their local productive capacity. Because basically the whole populace just started taking for granted easy access to goods that they could buy in cheaply from the world. And they stopped being able to compete even if they didn't want to be lazy, because when they produce goods, the wealth of their nation, of all that extra money being pumped in, drove up the cost of the goods in a way that was non-competitive, right? And so in the US, another way to explain Triffin's dilemma would be the fact that we basically, through being the world reserve currency, discovered that we could export dollars as a quote unquote natural resource. And we got Dutch disease of the US dollar in the same way Holland got it when they gave UBI with the discovery of the oil. And so you see this across all the spectrum of American industry. You see it from like the auto industry needing tariffs to protect it, which is how a lot of that got built originally, to like just the constant destruction of American farms for the last 40 plus years. I think 17,000 farms or ranches in particular, go under every year and have done so for like the last 42 years in the US. It's just been this, or like dairies is another example. You used to have in a lot of regional rural communities and local, like kind of this area of the country I'm in over in Oklahoma and north of here, like 200 or so dairies in each little local area. Now you're lucky to have like 2 or 3, because they've just slowly just been eaten by the monopolization of the economic pressure of just not being able to stay in business without being big enough to have access to cheap debt and financial marketplaces, because it financializes the whole economy.
So when you're talking about the auto industry needing tariffs to protect it, if we had sound money, that wouldn't be the case, or that would be less likely to be the case?
So on a gold standard, everybody's playing the same game. And because of that, nobody has this exorbitant privilege, but also exorbitant cost of you have a different set of rules that's wrecking your own economy while also giving privileges to your own consumers. In a hard money world, you're measuring the productive capacity and efficiency based upon a fair set of standards. Like I was talking actually today and yesterday with a buddy who ranches down in South America, and he was pretty grumpy about the talks Trump's having about the tariffs, because it's crushing demand for lean beef being imported into the country. And a lot of the guys who are into cattle markets here in the US, they understand that one of the big drivers of cattle pricing, it's not just supply and demand in America. It's not just heifer retention, herd size, and all that sort of stuff. It's actually strongly driven by the strength of the dollar and how strong the import market is. And so for him, he's like, man, this is taking away my ability to sell meat. I'm going to have like all this extra meat that I'm not going to have a place to sell it into, and we're going to have our prices fall. And I was like, man, like, I understand. He's like, well, why can't Americans just ranch more efficient like we do? I'm like, buddy, you don't understand. I can ranch just as efficient as you do, and you have a huge competitive advantage on me. And so the dollar is causing us to play with a different set of rules on the game board of competition. And so in this case, with Trump pushing towards the tariffs, everybody thinks it's moving towards a world that's less fair potentially, or more like taking advantage of people in the world or the economy. But really what he's trying to do is undo the negative effects of Triffin's dilemma, and in a lot of ways get us back on stronger footing as a country. Because even if you just think about, like, say, the posturing with China and how they're starting to think there might be a hot war, if you're looking at some of the military intelligence coming out, and we don't have the manufacturing capability we have anymore to be engaged in a war. We'd burn through our stock of missiles, weapons, whatever, really quickly. And unless we get manufactured and reshored, our power as a nation has basically reached as far as we can push it with enjoying the exorbitant privilege, but the cost is coming to bear now. Does that make sense?
Yeah. So you said that your buddy in South America has kind of that unfair advantage, or they have the unfair advantage. Is that because the dollar is the world's reserve currency and they're wanting to import those dollars basically, and we're trading that for the lean beef?
Correct. Because the currency mismatch means that cattle from them are cheap,
right,
and cattle from us are expensive.
Yep.
And so you already have this instantaneous discount that's happening that I, as a rancher, have to try to compete with him and be as efficient as he is, plus the spread of the currency war.
Right.
And that's what's just eating American ranchers alive.
Yep. I'm working on producing an episode with a seed stock producer from Canada, and that's what he said. He said, not Americans don't always realize this, but because the dollar's so strong, they get a 30% discount on buying bulls out of Canada.
That's wild. So, like, what kind of small business can compete in a marketplace where you're at a 30% disadvantage? I mean,
Right.
Your average margins of profitability aren't that wide.
No. Yeah. No.
And forget point long-term gains of like the actual compounding interest effect of reinvesting that capital to greater like ability to ranch better. It's
Right.
just you're constantly got basically like a 30% interest payment on your operation you have to be paying.
Yep. Okay, so we have been getting away with murder from a soil perspective because of the fertility left over from the bison herds and their impact on a lot of the plains. We've also been getting away with murder financially because we're the world's reserve currency, and so we can print money out of thin air, fiat currency, and people still want it because it is the world's reserve currency. And those two things together are working together in concert to really gut American agriculture. Is that in line with what you're saying?
It's a little more nuanced in the sense of even if you want to approach farming or ranching from a really strong posture of ecological stewardship, you have this 30% interest rate, just to kind of swag your Canadian ranchers estimation there, that you're constantly paying. And that tension causes us to always try to find a way to survive. And it's not like the American rancher or farmer is some evil person who's trying to destroy their own land base. These incentive sets are large and they're largely blinded to where you don't understand the influence they're having on you, which is why it's great to have these conversations. Because our drive has forced us to be able to survive as agrarian producers, to overcome these negative incentives, has forced us to extract in order to actually not sink, right? Like I was reading an article the other day that the average American ranch loses 1.5% return on assets if you don't factor in land equity appreciation. The average ranch that owns their land, the family ranch, would make more money if they didn't run cows just as a land investment company than they do running farms. They lose money by running a farm. I mean, this is why in America, right, 89% of ranches are less than 100 cows. Average herd size of that tranche is 22 head. They're all hobby farms. They're farms that everybody has a town job, and it's largely a tax write-off play on their family's land holdings, right? But how many farmers or ranchers do you know that just slowly over the last 40, 60 years have sold down their grandparents' holdings of land, have sold down their parents' holdings of land, where it's just been cut up and parsed up just to smaller and smaller pieces, right? And this is because of these economic effects to where we can't compete. And the only thing making money is the investment value of the land itself. And that's one of the big problems too. I think the person who explains this best is Saifedean Ammous, I think is how you say his name. He wrote the book, The Bitcoin Standard. He says in a world or a country of soft money, that everything else has to be treated as money in order to make up for it. And so with land, we have this big investment premium that's in the value of the land now. And it drives the price way, way up. You've got Wall Street or foreign people like the Chinese and Russians buying land. Like you've got wealthy people from the cities kind of buying hunting or vacation properties, but they just view it as just like a hard asset diversification play, right? And it's outcompeting the productive capacity of the land to sustain pain for itself. The easy way to explain that would be like, if you look at a price of any good, a good that is traded with census store value, it has what you would call a monetary premium to its valuation. So say like gold. Gold is almost all monetary premium. It has some industrial uses in like electronics or other things, but it has been treated as money for so long in the world that the majority of its value is driven by that monetary premium as an investment asset where somebody else might want the gold as money later and buy it from you. And so that monetary premium outcompetes gold to be able to be used in a productive industry. You can't afford to use it for a lot of electronics. You can't afford to use it for any of the other productive things gold would be great for because the monetary premium of the spread on the price pushes it so high that it only gets used for just super, super profitable applications that can compete with that. The same thing has happened to American farmers and ranchers with our land. Our land is being treated as a monetary asset, and that spread of the monetary premium is outcompeting its ability to pay for itself productively. So just like gold doesn't get used for productive purposes, just slowly but surely American land is no longer being used for productive purposes. And this is where you see like the rise of different models, right? This is where like Greg Judy, he always talks about he almost went broke ranching, or he did go broke ranching until he tried a different way of approaching things. He decided it was better to control the land rather than to own the land. He wasn't trying to pay for land out of his farm operation anymore. He never articulated it this way, but what he did, he went and knocked on doors of all these guys who were these wealthy people who had investment properties that they used for recreational hunting, and was like, hey, can I run cows doing regenerative agriculture on your land? I'll do all the maintenance, I'll make the property better, but just rent it to me for free. You own the land as the investment asset, which is what's actually making you money. I'll make it more beautiful so the deer there will be better so you can have more fun here for your entertainment and your hunting. And as we all know, it went really well for Greg Judy. A lot of them gave him lifetime leases. It's just grown and grown, right? But what he did there is he just cut the monetary premium of land out of his operations. He separated out to allow land to be owned by these other people as an investable asset. And then he focused on running his ranch purely as an operational entity rather than a land entity that was stewarding something over generations. And you can get into all sorts of arguments about whether or not that's wise. Like you've got, like, I think ranching for profit, a lot of those classes teach that the ranch should just lease land versus try to pay for the land. You've done more of those classes and things than I have, Clay. Is that true?
Yeah, definitely. They want you to separate the ownership of the land from the management of the land. And so that's, I mean, what they're trying to get you to do is decide what is the most profitable use of this land. And so if you separate the operating company from the land ownership company, then the operating company has to lease the land from the ownership company. And we decide, well, is it more profitable for us to run our own cows or somebody else's cows? And, you know, all kinds of regional competitive advantages start to play into those decisions. But yeah, it is, they're definitely trying to get you to look at it from at least from that perspective.
And see, I would argue that breaks the incentives because you get away from these multi-generational stewardship type paradigms where, like, I would define regenerative agriculture as you're maximizing the photosynthetic energy capture while bringing that energy into the soil and the plants to balance the stock and flows, to kind of rob a financial term. You are having stocks of soil fertility for future production and ecological capital for diversity and resilience with flows of production that are brought out of the system to be sold into the marketplace for the value of today, right? And so when you have operational entities that are leasing land, you lose the connection between the incentives and the profit paradigms of the short and the long time horizons and of the stocks and the flows. The stocks of future soil fertility and ecological resilience and the flows of production of beef or crops for today. And when you disconnect those two, you run into all sorts of problems. I mean, you got the landlords kind of trying to push the guys to like actually do a good job doing regenerative grazing. You've got regenerative grazers or regenerative farmers that they're on the land and then they get rug pulled because somebody sells the land out underneath of them. They invested years or decade of effort into basically forestalling their own profit for the sake of building resilience and future fertility, and then that gets stolen from them. And a lot of times it gets turned into like a housing development or subdivision or something, right? You need a connection between valuing profit of future profit potential of stocks with current profit potential of flows. And the financialization of everything, which is driven by the monetary premium of land, but also the world reserve currency status that's gutted domestic production and financialized the whole American economy. Like Wendell Berry talked about this in The Unsettled America, where he talks about the collapse of the rural agrarian economy. And then right on the heels of that, we had the collapse of the industrial economy of America. And now basically all we have left is this hyper financialized economy. Like most companies making money today, they're just either building a digital good that cannibalizes productive industry, never really is cash flow positive, but makes money while extracting and gutting it. An example there would be like Uber destroying the taxi industry, but Uber like has struggled to figure out how to be sustainably profitable as an entity, even though the company's worth like billions or whatever. Or like Twitter, right? Twitter trying to turn a profit was losing money for years. And they are billion whatever dollar company, right? And they cannibalize mass media, but never really turned it into making a valuable product, right? The other side would be like become a bank. Does Apple make money on selling Apple phones, or do they make money on being Apple Pay and being a credit card? Like I heard a crazy one the other day. Grocery stores make a huge chunk of their money on their payment terms.
Yep.
So when they sell you a product, you pay them immediately. They pay most of their suppliers on payment terms of like net 90 or so, and they invest the money during the time they have your money before they pay their suppliers. I saw a statistic that was like a lot of grocery stores are making more money on their investment activities than they are on their margins of the product they're selling. Yep. And so these are what happen in like these highly financialized economies. And you end up in these kind of Weimar-esque type problems where the whole young generation is just gambling in the stock market with these 7 companies or whatever now that have the largest monetary premium. And so you're chasing those companies basically becoming money, trying to catch the inflation of them, or meme coins and just gambling on a bunch of just vaporware, because the young generation feels like they're just absolutely drowning. It's like if I don't gamble and join the financialized race, I can't ever survive is how it feels. I mean, they can't afford to buy homes. Forget farming, trying to afford to buy into the now capital cost of running your average rancher farm. I mean, there's a reason the average rancher is like 58 and a half years old now. It's just the young generation is just left at the door because inflation has priced them out of everything.
Yeah. Yeah, no, I appreciate that. So what's the way forward? How do we chart a better way forward?
So there's a lot of things at play here. The money in the international economics is a part of it. That's a really big, hairy problem, but it's probably honestly the easier part of it. Part of what's happened in America is with the gut of our domestic production is we've had the cultural gutting too, where the work ethic, the character, the culture, like all of those things need solving as well. And that's going to be a bigger problem for us. But to focus on the more simple one right now, I like what Trump's doing with tariffs. He's trying to basically pump the brakes on the exorbitant privilege that's destroyed our domestic capacities.
I think that's something that people don't understand about what Trump's doing with tariffs is that he's not necessarily putting tariffs on anything at a level that those things aren't tariffed from the other countries, right? I mean, like I think the dairy tariffs in Canada are like 200 and some % on American imports. And basically they're just trying to shut down American imports of dairy goods. And, you know, I don't think our tariffs on their dairy products are even that high, but it makes a big splash in the news when all these countries have tariffed American imports at greater levels than probably we're responding with to this point. Am I understanding that right?
From what I've seen that to largely be true. I mean, people hear this like 25% tariff number and they're just like shocked, right? But if your Canadian rancher buddy, if their numbers are correct, that's not even a large enough percent to make up for Triffin's dilemma yet. Like that's not even putting us back on an even playing field. And that's completely ignoring the tit for tat dynamics of the fact that American goods are largely tariffed. And so he's playing this game with a lot more savvy and a lot more nuance than people are giving him credit for. But I think there's some motivations that underlie that. I can kind of put on my tinfoil hat for a moment, where the globalist push of free trade is almost has this cult-like fervor behind it. And there's some kind of hidden economic incentives behind that, because when you have a hyper-financialized economy and you have these kind of just massive swings of inflation and shifting across the worlds of productive industries, you have these abilities to kind of ride these basically these profit curves of these boom bust cycles. And ultra high net worth people and the kind of people who have globally connected financial strings, they're able to extract a massive amount of profit and capital from the volatility of these dynamics. And these are a lot of the people who like are pushing things behind the scenes. I mean, this is getting more and more inside of the Overton window. I mean, you look at the numbers of like during COVID and all the money printing, the majority of that money, like 90% of that money accrued into the hands of the top 1% wealth brackets or something. That's me point an estimate out of my ass. I don't remember the exact number, but it was something absurd.
Mm-hmm.
Or like looking at US aid and all the stuff that just came out about how the political money of the grant system was being used to manipulate things all around the world in the media, right? And pulling strings of government overthrows and coups all the way to like manufacturing propaganda for the American people. And this push for those one percenters is to maintain this globalist game because it's enriching them at the expense of the standard citizen of the world, or especially the standard citizen of America, who's getting left behind by the gutting of the domestic production of the middle class, right? That problem is going to, of course, cause all sorts of vitriol, to where there's going to be well-funded media attacks and maligning Trump and saying he's going to destroy the world, and misinformation campaigns that, just like COVID, we'll discover 4 years later were just completely fabricated lies, right? And it's good for us to be having these conversations. Like we were talking about Will Tanner in the American Tribune. He was publishing some content about, who was it, McKinley? Their tariff, the principles they applied from their leadership and how much good it did for the American people. It's really good to be visiting history and looking at the underlying actual ways these things work, rather than just the hype cycle of the media, because the media is largely being driven by those who do not want to see this problem fixed. And ultimately, like at the end of the day, right, all power flows from the consent of the governed, which is largely the middle class. But if you can keep the middle class indoctrinated through the media pushing false information, it makes it really hard for these problems to be fixed. So you've got Trump pushing on this with the tariffs, but this is also why you see this rise of subcultures. In this case, like the biggest one I would reference would be like the Bitcoin culture. You see this a lot on Twitter, which you're on, Clay, where you've got this really fervent group of young people. And it's a lot of that culture is in America. And it's this push to return to hard money. Bitcoin is a mental model if nobody's really thought about it. The easiest way to explain it is it's basically like digital gold that can be sent over the internet. It has an unforgeable costliness through the proof of work mechanism, where you have to spend energy through a computer in order to essentially kind of a mental model would be to manufacture the Bitcoin. And so it's a fixed supply of hard money that is globally accessible, but also digital. So it's abstract and easy to self-custody. Because like the problem with gold, right, is it became a paper economy where everybody, in order to use gold as money, was keeping the gold in a vault. They were getting a paper coupon for it, but it just slowly got more and more leveraged to where there was more paper than there was gold, and then the financial manipulation just basically gutted the capacity of gold to provide any checks and balances on this financialized economy, right? And so this fervency of this Bitcoin subculture is this idea of let's return to a hard money that's going to collapse the monetary premium out of everywhere that it shouldn't be. In this case, that would be like a lot of the young people, it's housing. How do they buy into houses when houses are an investment asset, not just a place to live and build a life, right? It's you have to catch the inflation and then catch back up with that in order to even have a place to buy a owned roof over your head. If you bring the monetary premium out of housing, it makes it available and accessible to the young generation to build lives again. That is hugely at play at farming, because farming is so like capital asset heavy of land and everything else that goes into it. Animals, farm equipment, tractors, combines. And basically, like even thinking farm equipment, right? So much farm equipment is sold on 0% interest, and you basically just hold that for the term of the loan and then roll the equipment. And the equipment is actually maintaining its value pretty well because of demand for it. And once again, the farms are playing financialized games on the finance terms. Like everything is just finance these days. But the idea is Trump's playing the short-term games with the tariff to try to pump the brakes and bring us back to more of a rational competitive playing field. But the long-term solution here is we need to return to a hard money that draws the monetary premium out of all the goods so that those goods can function in a sensible manner in the marketplace again. The reason you see the fervency around Bitcoin in particular is because Bitcoin is hoped for to be this kind of cunning roundabout way. Like there's a lot of kind of the older generation wants to see America return to a gold standard. But how do you force a country back to a gold standard when there's so much paper gold in the marketplace and so much incentive to use inflation to manipulate the incentives, right? Like, once again, kind of referencing something that's more inside the Overton window, you've got the incentives during COVID, where the government was giving out money to manipulate positive test cases with the PCR and positive, or using their treatment protocols so that you got a handout to the hospital for funding them, right? And
or even more, I think there was more money that came to the hospital if it was recorded as a COVID death, right?
correct, like the guy who died in a motorcycle wreck, but he was
Right.
filed as died by COVID.
After you run the PCR test enough times for a false positive.
Exactly. And so how do you change a political system that is in a sprint to the bottom with inflation because it gives them political power, right? It doesn't really work. There's no political will that's capable of overcoming that incentive set. It's the same thing with the entitlement programs of like Medicare and Social Security and food stamps type programs, where once you start down that path, once you try to stop it, the voting population is so attached to it that it's just basically like a snowball that just picks up more and more energy until you just hit the bottom. The idea with Bitcoin is that it's a return to a hard money that is digital. You can be self-custodied, so there's no, you can always just lay claim to it and avoid the paperization of it. But it's this cunning path where, because it's a scarce hard asset that's so easily accessible, it can't be gate-kept from the middle class and the normal economy by the financialized 1% of the rich people. And so it's gotten this grassroots adoption where it's growing into being this, once again, a money, the most liquid good that could be used to be traded for other things. And its ease of use as money is gaining more and more traction of being used as a store of value because it's appreciating like crazy over the last 15 years. And as an actual money for just transferring value around because it's honestly more convenient than bank wires. And as that happens, it's becoming seen as the safest place to store value, to where you're not going to have bank bail-in risks with your retirement accounts and your 401ks, or you're not going to be at the whims of the corporations you're investing in and their good or bad business decisions, or any of these market dynamics of other things that are being treated as money but don't really make good money is kind of the best money wins. And as that happens, the incentive is just this snowball effect of more and more value to flow into it. And so you see this with, say, like Michael Saylor's been on the media and the news talking about him and MicroStrategy, or just Strategy now, I think they're called, accumulating this reserve for their cash as a company into Bitcoin. And he's kind of kicked off this cascade of more and more wealthy people. I forget the guy's name, Ricardo Salinas or something like that, down, I think, in Mexico, is a really wealthy guy who has, I think, 70% of his net worth in Bitcoin. So it's kind of still in the early mover phase, but guys are going deeper and deeper into it. But post the ETFs and some of that consciousness of understanding getting out there, this game theory is starting to take effect to where if somebody wants to protect their money, they need to put it in the thing that is being treated as money and growing the fastest, which right now is Bitcoin. And it has been for the last 15 years. And so it's starting to cannibalize the monetary premium of other assets, which is why it's starting to reach the national stage of even the Trump administration is having this meeting coming up of talking about a strategic Bitcoin reserve, where bringing U.S. money onto a Bitcoin standard, because it's appreciating so aggressively as an international borderless payment system of money, that it's actually outpacing the dollar status in the world. And if they don't adapt to that, the US dollar is going to lose its privilege with, like, the world reserve currency of, like we were talking about, the exorbitant privilege of Triffin's dilemma. But it's going to have everything get demonetized and kind of get left behind in the race if they don't participate. But this is also a really unique opportunity, because this is actually really good for the US. If we can leverage a global free market money that we can enter into, it rescues us from the problem of Triffin's dilemma with a lot less volatility of trying to force our way there, with either overcoming the lack of political will for returning to a gold standard or like the imposition of really aggressive tariffs. We can kind of play it with a lot more cunning, invest into Bitcoin as citizens of America, which is largely happening, and the nation's starting to talk about holding some of our dollars in the reserve of Bitcoin, so that all the goods in the world that are currently carrying a monetary premium, we don't lose our wealth as they get demonetized, because we move our money into Bitcoin, which is a good hard money. That maintains the value. The monetary premium gets sucked out of everything, of like land, housing, whatever. Even a lot of companies on the stock market that are just honestly largely a monetary premium, which it's happened before in history. That happened with Weimar Germany. Everybody became a day trader because the inflation was so fast that they were buying these stocks. Everybody from the shoe shiner to the taxi driver was talking to each other about what stocks they need to gamble onto. And we have that happening now, and a lot of people, if they don't adapt to that, when that monetary premium gets sucked out of those goods or those investments, it's going to really hurt them. And that could have a synergistic resurrection of our ability to grow and produce things again, but while protecting us from the kind of recessionary collapse type dynamic that typically happens in these periods of history. So then the real problem after that just becomes fixing the culture in America and the skills loss of like the poor education system of the last generation, so that we as a people return back to being useful and productive again.
So I just want to make sure I'm understanding you correctly. The monetary premium that you're talking about is basically land is more valuable as an investment than it is in its productive capacity.
Correct.
Okay.
Correct. Which is why, like, a lot of us, not, I guess my family was cropper families in the Dakotas back a generation. My dad wasn't a farmer, but like other friends of mine that have stayed on the farm, they tell me stories about their grandparents. They could buy property and then pay that property down in just a handful of years out of his production. Versus now, like, yeah. I was reading an article put out of like a University of Kentucky or something like that about the carry cost of a single female cow. And if you count all the input cost, all the overhead, depreciation, labor, on rented land, the carry cost per cow in 2023 or 2024 of an average like ranch in America, I think it was a 40 head ranch, which they're trying to hit that like 89% of rancher category in this.
Mm-hmm.
I think it was $984 per cow for just her yearly carry cost. If you look at trying to pay for the land out of the production, typically the cost of a mortgage at current interest rates are around 20 times more expensive than a standard land lease in most parts of the country. And I reran the numbers, and it was over $2,300 per cow carry cost per year if they were trying to pay for the land out of its production.
Wow.
And this is why family properties just keep getting cut up and sold off, right? And so getting out of this monetary premium and this Triffin's dilemma of American ranchers not being able to compete on the global marketplace, it gets us back to where we can do what our grandparents did, to where you can purchase land, farm it intelligently, steward the soil for your grandchildren, all while actually being able to grow your land base and acquire capital because you're not just being gutted by dynamics larger than you can control that you're largely even unaware of as most ranchers or farmers.
Yeah. So what in your mind are the steps forward? How do we start making progress, meaningful progress?
That's a great question. So obviously I advocate for supporting Bitcoin as a return to a hard money in a cunning way. Obviously I advocate for what Trump's trying to do with the tariffs to pump the brakes and pull us back from the exorbitant privilege of Triffin's dilemma and to front load the pain versus just keep plummeting downhill waiting to hit the ground. I'm also a big fan of creative solutions, like the story of Greg Judy we were just talking about, of kind of banding together as communities to understand that agriculture economically is broken in America, but that we shouldn't stop trying to grow and produce food because of it. So like what we do at our ranch, we run our cattle herd, the beef herd, through a herd share program where middle class families or lower upper class families, they own the breeding stock. Like a lot of them even have done like self-directed IRAs for the retirement accounts, and they bought cows. It's a diversification play of a uncorrelated hard asset. We're a low input regenerative ranch that is not connected to global supply chains. We're using heritage breed, really disease resistant genetics that don't require connections to like pharmaceutical supply chains. And so for them, it's this idea of something that's a really good diversification play. And so then every year when the calves are born at weaning, we split the calves. The lion's share of the calves go to the farm to fund its operating expenses. They get a little bit of real yield, and then they also have that as like a high quality, high nutrient density food security, right? And so it's almost like we've started building this model as a like inverse feudalism would be the best way I could describe it, where like feudalism, you have centralized ownership of the land assets or whatever productive assets, and you distribute out management control to the peasants who farm it for you. Then you extract a fee back up to the top again. What we're doing is almost the opposite in that it's the distributed ownership of the assets across kind of the middle class and lower upper class families that own these things with us on our farm, and centralizing the stewardship so that we actually can reach an economically viable scale of the regenerative operation. Because you can't really run genetics programs like we're doing for the ultra high density beef cow that we're building. You can't really like build up things that are truly viable at like a 20 or 40 cow size. You have to be a lot bigger than that. And so this creative model of community participation under this basically like a trustee type dynamic, to where I, as the rancher, have total decision-making capability. They understand those kind of expectations up front. It's enabling us to front load or pre-exit this problem of the over-financialization to play a different game that's not totally dependent upon competing in the marketplace of selling black-hided Angus at the sale barn while we're competing against lean beef from around the world on monetized land we can't afford to pay for, right? So you put those kind of creative ideas together, that definitely is really helpful. Honestly, I really just strongly recommend currently leaning against the incentives as well. Like, we live in a hyper financialized economy, and everybody really thinks about money as the main thing that they're pursuing in most cases.
Hmm.
I'd really strongly advise don't. Like, ultra high net worth people, they end up being wealthy and protecting their wealth across generations because they're largely not thinking in money. They're thinking in other forms of capital. They're thinking in social capital, political capital, like all sorts of other ways to shape the world. They're thinking more in power. I advise stopping to think about money and starting to look at the strategic landscape of what happens during these volatile periods of history and position yourself to take advantage of the opportunities of this chaos as it unfolds. Like, I would define entrepreneurship as having an accurate long-term thesis of where the world's going and having the grit and creativity to adapt and survive until it comes true. I would advocate for approaching the world more as an entrepreneur, looking less at like maximizing immediate cash flows. Like, yes, cash flows are important. Like, yes, it's cash flows that push most small businesses out of business, not lack of profitability. You have to be cunning there. But I would advise looking at the world more strategically and realizing that during these kind of shifts, a lot of the rules of the game are also going to shift. And if you can be prepared for that and shift with them or shift just slightly ahead of them and survive that process while also moving against the current just purely financial incentives, there's a lot more potential long-term opportunity and value to be captured. I think those are the best recommendations I can currently give. That and bond together with strong community, because that's where your resilience lies during times of chaos. Don't try to do this on your own. That can bite you both with financial volatility and with just any other world chaos, whether it's supply chain volatility or even with political chaos cascading into social chaos, like the Black Lives Matter protests, like say that cascaded into like more violence towards farmers like you see in South Africa. It'd be really smart not to be on your farm with just your own single family. So it's strong communities that enable you to not just weather things, but be anti-fragile and capitalize on the chaos to come forward to a better position than you were previously.
Yeah. Would you agree with this statement? It is probably too late to become a Bitcoin billionaire, but it's not too late to have other benefits from holding Bitcoin.
I still think we're pretty early.
Yeah.
I mean, if you look at the amount of monetary premium on assets all around the world, I could easily see Bitcoin becoming a like $100 million-billion asset in total. Like right now, or no, that's not what I mean per coin,
Right.
not total market.
Yeah.
Because if you look at like the bond markets, the treasury markets, like all of these things, like the housing and real estate markets, um, the like stock market of companies, all of these things have a huge monetary premium. And I mean, Bitcoin's basically a binary play. It's either going to fail or it's going to eat the monetary premium of everything and become a global reserve currency. And thus far, it's not failed. And every year it doesn't fail, it gets stronger. And the chances of it winning versus dying is a lot higher. It doesn't take owning a ton because the exponential upside's so high that even just like if you had some cash, like 95% cash and 5% Bitcoin, it's really enough if Bitcoin wins to protect you from that monetization getting eaten from everything else. But if you're willing to run the risk of, and what my stance would be is the moral play of investing in, participating in the monetary appreciation of Bitcoin by carrying more value in it, it's helping fix the world by restoring the capability of production again through gutting the monetary premium of all the places that it shouldn't be and getting away from the central political entities that control the value of money, which is harming a lot of us. So if you're willing to run more risk and carry a higher percentage of your net worth in it, it helps Bitcoin move forward to win this game on the global stage. I wouldn't be surprised if in the next, I don't know, 10 years, Bitcoin becomes a 10 million. I mean, maybe if the nations start buying it really fast, $100 million asset. I mean, that seems insane, but I mean, 15 years ago, Bitcoin wasn't worth anything. I mean, a couple years into Bitcoin's life, 10,000 Bitcoin were traded for 2 pizzas that somebody delivered to somebody, right? Like, this is an exponential effect, and exponential things are hard for people to understand. And it seems irrational, but these times in history are irrational. Like, you look at like Weimar Germany, you look at the charts of the value of like gold in their economy. It was just up, down, up, down, up, down. It just destroyed lives all over the place. It even caused violence to happen against farmers because farmers were tied to real production of hard assets. And it wasn't just floating up and down like the paper that was inflating away. It was just steadily plodding upward. And everybody thought the farmers were extracting from them and robbing them, but the farmers were actually the real valuation of the real cost and showing kind of the emperor's no clothes of the money was becoming worthless. And the goal here would be if we get enough participation and at least people holding like 5% of their value into Bitcoin, that way they're not just going broke as this volatility happens in the world. If we get people to hold more than that in it, like we're going to accrue value out of all these ultra high net worth people who have been accruing value out of us the last who knows how many years. So that would be good because it could protect from social violence and chaos. Because if you don't have the middle class being destroyed by this volatility, and there's a sense of stability or even advancement, you won't have the middle class coming after farmers violently like you did in Weimar, right? So, like the idea with Bitcoin there is that it's going to be volatile because it's the true thermometer of what's happening in the world. So don't save anything in it that you need in the short term. I would count short term with Bitcoin anything less than 4 or 5 years. But if Bitcoin wins, it is always going to go up. It is always going to outpace the inflation or collapse of the monetary premium, everything else significantly. And so if you can hold something for 4 or 5 years, I recommend like that minimum, like, I guess not financial advice, but if you were my own family, I would tell my own parents, like it's not smart to hold less than 5% in Bitcoin. And if you want to ride it up and actually play that as a stance in the world of something you believe in, getting above 10, 15, 20% is sensible of long-term savings.
Yeah, well, I mean, just even in the last 6 months, it's gone from just a tick over $50,000 per Bitcoin up over 100,000 in mid-December, and now we're, as of recording this, we're hovering around 88,000. And so I think there's there's obviously movement and an opportunity there in the short term, but ultimately the long term, as you're saying, as we do have competing world reserve currencies. BRICS is out there trying to make their play, and the American dollar continues to be weakened through excessive printing of money, especially in COVID. I don't remember what it was, but especially in the last 20 or 30 years, when you look at the 2008 financial crisis and the bailouts there, and just huge percentage of all the dollars printed in human history have been printed in the last couple of decades or so. And so it's just continuing to compound. And so I think that the future for the dollar maybe isn't bright, but the future for Bitcoin could be. And depending on how bullish you are on the future of Bitcoin, you can choose somewhere in there. Again, like you said, not financial advice, but between 5 and 20% being reasonable.
Yeah, I carried most of my treasury for the ranch in Bitcoin from like 15 grand up to where we are now. That went really well for us. The dynamics at play in the world here with us having been just, I don't know, the blood sucked out of us by the vampires of the Federal Reserve and the ultra high net worth people robbing us with inflation for the last couple generations. Bitcoin is the ability to front run the one percenters to where the middle class actually has an opportunity to undo a lot of the harm that was done to us. And it's a unique opportunity that does not happen often in history. And I'm really hopeful in the sense that if we play this game right, we have young people pushing forward, like the guys talking on Twitter about the restoration of the industrial and manufacturing capacity of America, or like guys like my team who's pushing forward trying to figure out the regenerative stuff at economically viable scale, who are leaning against the incentives to kind of prepare the way for production again. And we get enough participation of the American citizenry in Bitcoin, and Bitcoin's actually able to win. This could be a less violent transition to a restoration of America, of what we dream of America used to be and could be again. Like, one thing people got to get out of their heads is Bitcoin's not bad for the US. Even losing world reserve currency status is not bad for the US. We're going to lose it. Triffin's dilemma is inevitable of eventually it's going to just destroy us. We have to get off the train at some point. This is probably the only opportunity we're going to get off that train in a semi-smooth manner that doesn't wreck our country in the process. And I think it's really important that get into the narrative, because a lot of people are looking at like Trump getting into talking about Bitcoin. And I mean, understandably so, because the conversation has a lot of stupid, like just meme coin stuff around it too, which do not deserve to be in the conversation. But a lot of people are saying like, well, why is Trump wasting our national money on buying something like this? And they're not understanding that this is an opportunity that could actually lead to the renaissance of America if played smart and done well.
Yeah, very good. Well, I appreciate the perspective. I appreciate your time today. And obviously we could talk a lot longer about this. Where would you send people? What are some helpful resources? As I said, the article from the American Tribune will be in the show notes page for today, but where are some other places that you'd recommend people to go to educate themselves?
If we could post the podcast I did with Will Tanner on the Old World podcast with the link, that'd be awesome too.
Yep.
I talked a lot about the challenges we've faced trying to build the ranch here, and interpret it in the context of kind of the larger culture and macro sense we're just talking about. Our website is smokeriverranch.com. I'm on Twitter at Untapped Growth. I also have a Smoke River Ranch Twitter handle. Most of my more kind of macroeconomic or political stuff happens through the Untapped Growth account. The like Smoke River Ranch is just purely farming and cattle focused. But all those would be the best places to find out more about us. We have more information about the herd shares available on the Smoke River Ranch website. You can go there and read a little blurb and then sign up to have the actual like packet sent to you that explains it all and talks about how it works.
Sure. Well, sounds good. Joel, thanks for your time today.
I'm glad to be here with you, Clay. It was great to be on the other side where I'm actually talking with you versus just listening to you talk to somebody else.
Very good stuff there. Really appreciate Joel's ability to articulate those things, and felt like I was able to understand a lot of what he had to say, but very much appreciate him and his patience with me asking some pretty basic questions there. So as I said, on Friday's episode, I wasn't sure I was going to get this out on a Saturday. And so as I said on Friday's episode, coming up next week on the Working Cows podcast, we will be talking to Preston Cave. And Preston has been using drone technology for quite a while in North Carolina there. Challenging terrain, very steep, rocky terrain. And he's been able to plant some cover crops and do some other things with drones in that difficult terrain, and also was a very key resource in the relief efforts from the hurricane that hit Western North Carolina earlier this year, and we're going to talk to him about that as well. So look forward to sharing that with you coming your way real soon on another episode of the Working Cows podcast. We'll see you then.
We invite you to visit workingcows.net to subscribe to the show via iTunes or Stitcher. You'll also find detailed show notes pages, resources from our guests, and the industry leaders who have influenced them. For more ideas on putting your cows to work for you in a more profitable way, tune in next week.